All right, let's go. Let's get started here. We got the S&P 500 at all-time highs. Let me switch this camera over. All right, so we're at all-time highs. We're going to hit, just so you guys know quickly, we're going to touch upon the economy. What's going on in the economy this week? Monetary policy. We got the Fed's beige book, which is an outlook on what the Fed is seeing. Technicals, positioning, sentiment. Right, where yields at the dollar, all the risk, all the macro stuff. And then also, what is the big risk to the market into Q1? Because we are going to get a growth slowdown. So what might that look like for the S&P going forward? But for now, LFG, what up, Doifer? We are headed higher. All right. And right now, so here's what we got this week, and we'll go over the actual data, the charts. Michigan consumer sentiment up, right? Michigan consumer sentiment. So consumers are, this was a pretty big beat. Consumers actually saw, and it depends on who they're measuring, but a big positive outlook for consumers, right? Basically, they're more positive going into the next 6 months, right? Financially, yeah, the stock market's up, wealth effect, all that stuff, right? But I think the big thing here is that oil prices are still, gasoline prices are down. You also see inflation expectations down. They fell. Retail sales are growing on a year-over-year basis. So GDP looks pretty strong. Manufacturing and industrial production, right? Productivity is one of those big buzzwords. Is growing. It's now positive, and and we'll see. The manufacturing sector is a little weak in the Fed beige book, but it looks like it is growing underneath the hood. And that's a lagging signal from the Fed, but it's a forward-looking signal from the data. So anyways, that's expanding, right? Home builder confidence is up, right? So those rates came down a little bit. Now you get home builders starting, and they're forward-looking. So home builders are saying, okay, we see more positive. We see a more positive outlook going forward to build homes as long as those rates come down. And we can go through those again, but I wanted to key on the Fed beige book first and foremost. That came in the middle of the week, I believe. And, the market did bottom here. And this was actually the Fed meeting VWAP, the anchored VWAP from the Fed meeting. But let's take a look at the Fed's beige book so you can see what the Fed's thinking. Because, again, as we've been saying, the market is trying to figure out when is the Fed going to cut rates. It's concerned with, are you going to cut too late? Or are you going to cut in time? What kind of cut is it? Is it based off of a weak economy, or is it based off of falling inflation, right? So let's check that out. I got the highlights on here. All right, Fed beige book first. Let's touch on that. And then TikTok, you guys can just listen. You don't have to look at the chart. So first we got, let me pull this forward here. There we go. All right, Fed beige book. This is the overall economic activity happening in the market. And I just did some highlights here. Nearly all districts, there's about 12, I don't know, there's like 8 districts, 12 or 8 districts. I'm not sure. There's, different ways to look at it across the country. And they just report back on the region on what's kind of going on there, right? Prices, labor markets, activity, all that. So nearly all districts reported a decrease in manufacturing activity. So that's a key word there. There's no slowdown in services yet, but this is backwards looking. So it is looking at, Q4, which was the Santa Claus rally, consumer spending. So of course it's going to be a little stronger, but manufacturing still weak, right? However, the prospect of falling interest rates was cited as a source of optimism, right? Falling interest rates. Why? Because the Fed's already signaled, hey, we're going to have to cut. They know things are slowing down. We see it in the Fed beige book, which we're looking at now. Things are starting to slow down in the overall economy. Some of the big weaknesses were, communities were worried about. Basically, they were worried about new jobs. They already have new jobs, but they're worried about, hey, are we going to get any? Our savings are running out, right? Our savings are running out. And some of the communities were complaining about, number one, car insurance. That was extremely high. Car insurance is destroying people, right? Hopefully I don't get whacked for that one. And it was for businesses, it was healthcare insurance was destroying them, right? So there's some things that are hurting people. Either way, nearly all districts, this is for the labor market, nearly all districts cited one or more signs of cooling labor market. So the labor market is cooling. No, the Fed can cut rates if that continues. Easing wage pressures, very positive, right? If you're a consumer, Now, if you're an employee, you want more, you want higher wages, but those are paying for the higher skilled jobs, right? Lower skilled jobs, wages are not really going up. Higher skilled jobs, wages are going up. Wage pressures to ease and wage growth continuing to fall. So you're going to get the Fed, you know, it looks like the Fed's looking to cut rates. They have to ease in some way or another, whether it's liquidity, they inject more liquidity, which I think is going to happen here, or they cut rates. But I think they're going to start injecting liquidity in some way or form, right? Now, prices, this is the most important part for the market. Most districts cited examples of steady or falling input prices, and we saw PPI extremely low. PPI is extremely low in Germany, in France, in the UK, and these are producer prices for businesses. And in China, what does that do? That opens up the gate to start flooding liquidity into the market, and that doesn't go into the economy yet. It goes into capital markets first, and then it seeps into the economy later down the road, maybe March, April, May, who knows. But this opens up the door. This is the catalyst, and I'm gonna keep saying this, the catalyst for monetary easing that is coming. And everybody thinks, oh, inflation is going to rip back up. Just watch oil prices. No, not if oil doesn't go up, right? Especially in the manufacturing and construction sectors. I know there's a little lag, but basically prices are falling for manufacturing and construction, which means you can build more. Okay, prices are lower. We can do a lot more output. And we're seeing a record for builds in that area too. So that was the Fed's beige book. There's a bunch more details that we could go through. But the main thing here is that prices are falling. Manufacturing is still weak, right? Looking in the fourth quarter, that means they can print or they can start flooding stuff in the manufacturing sector. Businesses can now start building a lot more because there's a lot of demand for construction. So flipping over to the actual economic data, right? Before we get to the technicals, flipping to the economic data, let's take a look through this. All right, and this is just this week. This is what we saw no, that's next week. I was looking at what we got next week. This week, what do we get this week? All right, so this was shocking. This was the biggest drawdown in the New York State Manufacturing Index, I think in the last like 50 years. It was a big drop. Or, you know, as far as the data measures, other than the pandemic, but that was kind of a black swan event. So New York manufacturing extremely low. And they did cite that in the Fed beige book that manufacturing was dropping significantly. And all that means is more stimulus, right, to come. There's going to be injection in New York pretty soon. Construction anyways. Retail sales month over month were pretty strong, but I wanted to look at retail sales year over year, still expanding, right? And that was what, April, the bottom was somewhere around April of 2023. So you see the retail sales, consumer spending is still ramping up. Now this will probably decline obviously in Q1, Q2. We expect that to decline, but the trend is still up, right? From the lows, starting to rebound. This is an initial bump in the economic cycle, right? In the business cycle, we're seeing this was the bottom right here, and now we're starting to re-accelerate. We're starting to re-accelerate. So that is coming online, which is what phase of the economy? Well, it's right after winter. It's right after everything pretty much falls apart. Now you're starting to re-accelerate, and you see industrial production, which is one of those signals, also start to re-accelerate from negatives back in October. And that's going positive. And we haven't seen that for a while, right? Manufacturing, same thing. Manufacturing production, boom, big bump up. So it's weird because you're seeing manufacturing weakness, but yet it's still re-accelerating in some areas. And I mean, I don't know how to explain that, but what I do know is that there's a lot of stimulus going into manufacturing. We had Biden also, well, let's say the fiscal authorities, right? Because I don't want to say too many things that get me banned on these platforms. The fiscal authorities still printing money, and we're going to get to that, right? NAHB Housing Market Index. This is basically the home builder sentiment, right? Those who build homes looking for demand. They want to see more demand to build homes. They're seeing more demand pick up, and they're anticipating, as we saw, they're anticipating that rates are going to come down, and that's going to stimulate more demand into the housing market, right? Existing home sales are pretty low. So we got that, and then see building permits. This was a big one. This is a forward-looking indicator. Building permits are still holding up here. Building permits holding up. What does that tell us? That there's still more building coming into the economy. So there's no sign of recession there, right? The manufacturing, the construction sector is still picking up. Good news. Housing starts also, they're not falling apart. There's no recession here. They're still pretty low, but we need those rates to come down, right? We need those rates to basically come down to get that reacceleration. And then today, this morning, after the S&P exploded, what do you see? Consumer expectations, highest level in what, 2 years? Highest level in a couple of years. So this is a high level. Consumers are expecting financial conditions to pick up. They're seeing, you'd expect that to go, be a lot worse, but there's still a lot of jobs out there. There's excess demand, and excuse me, there's a supply of jobs. So we're looking positive there. All right, existing home sales, those are weak because you just need rates to come down a little more, right? Those have been falling, and those are just mortgages, people, moving house to house. They're not going to move yet, but there is building. There is a lot of builds happening at the moment. But inflation expectations, I think this is another key reason why the market is breaking out. Inflation expectations down to 2.9%. Those are falling. And you saw the Fed beige book. They're expecting prices to continuously ease, right? Not go negative. That'd be deflation, but to ease. And that's going to open up a catalyst for more printing going forward. Earnings also look pretty good so far. So if we flip over to the actual Fed cutting rates, what is the market expecting? Let's update it. The market is expecting, and this flipped considerably. They're not gonna cut in January in the next meeting, but we are looking at the March. Now this was at 70% last week, which is they should cut in March. Now it's down to 44%. So that tells us that the market is now pricing in no cut, right? Not no cut, but a lower chance of cutting in March. But it's still moving higher because growth expectations are, there's no recessionary expectations here. And I know you look at the yield curve and say, oh, well, the yield curve is going up, but the yield curve gives a lot of, false signals. And we can explain that. Part of the yield curve is that businesses anticipated weakness, and so they kind of cut their costs. There was no surprise. So the yield curve isn't that accurate at the moment. Plus, you got fiscal policy coming in, a lot of fiscal authorities printing money. We got more today for electric vehicles. We got more for energy storage. We got more for student loan repayments. So a lot of money continuously coming into the market, right? Then you're going to see that it's a presidential election. So what do you expect? It's a cycle. You're going to get more printing. We've talked about that. And so, yeah, the market is not even expecting a cut, and it's still moving up. But I think some of this is sentiment positioning. It's not just purely off of, the rate cuts, right? The market, Tom Lee said the market can still move higher without rate cuts. And then this morning, Biden administration to forgive $4.9 billion in student debt for 73,000 borrowers, pretty much. Now, what is the signal? This just tells us that it's not going to stop. It's not going to stop. As long as we're in this election cycle, you're going to see more fiscal printing coming into the market, right? Now, down to sentiment, positioning. I think we finished that part. Yeah, positioning and sentiment. Let's go to the technicals, right? Or actually, not the technicals. Yeah, let's go to the positioning and sentiment. So the CNN Fear and Greed Index, right? Greedy, fearful. We're at all-time highs, but we're not at greedy yet. And I think what we're going to get is one more flush higher, because now we're at a point, and on a technical basis, we're at the point where the market, breakout traders will step in. They're going to start stepping in. Those longs are going to step in. A lot of people that are underweight equities to some degree are going to step in, and you're going to get another big breakout. And I think we're just going to see a lot of volatility because positioning is still pretty hot, right? There's still a lot of positioning into the market on the upside. And I don't think that comes unravel till maybe after earnings, midway through earnings, or maybe March. But this is actually the exposure index. So these are fund managers. Their exposure came down. This is very bullish, and this was a signal from Wednesday, right? So the exposure came down, meaning they got underweight stocks. They sold a lot of their stocks, and now they bought the dip, right? So if you see this come down, this is basically where they're positioned, not the sentiment, but where they're actually positioned. They unraveled their positions a bit, right? And then we did have that bounce in the S&P. We had a nice little bounce. You can't really see it, but it was on the anchored VWAP. So this is volume weighted average from the technical high watch. Let's look at this. So this sentiment came down Wednesday, and here's where the bounce was. Okay, here's the bounce. This is why we always have those anchored VWAPs up. So this was the Fed meeting. This was actually the Fed meeting, the last Fed meeting. And so I like to anchor VWAP at that point. And what did we get? We got a slip. We got the S&P slip below anchored VWAP. Everybody got bearish. That sentiment unraveled, and then there's a big upside move, got above that level, and we exploded from there, right? So you had your level down here. Now we're at the breakout point. So anchored VWAP. Now we're gonna see we're gonna have to redo these anchors because we got a new high now. We have a new high in the market. The low is still down here, so we'll keep that anchor VWAP there. These will probably start lifting. We'll start to go higher. We didn't even come down as far as I thought we would. But anyways, back to the sentiment and positioning for the market, right? Positioning came down, great. If it gets too high, that's usually where you get a sell off, you get a big sell off top. Let me see, why does this look like this? Oh well. So next time we get positioning high, that's going to be a sell signal, right? That's going to be a sell signal once we get positioning back up there. But for now, it looks like we're, it's all air from here. Bullish sentiment came down considerably, and that allowed us to push up again. But there's still, and the put to call ratio also switched. So there was, people are, once this peaks out, you're going to get a pullback, right? But it doesn't mean it comes all the way back down to the lows. It doesn't mean that everybody gets super bearish because you need the Fed to do something wrong to make a mistake. You need oil to spike. You need some type of issue in the macro to happen. And we're not seeing that issue happen. So I think this just stays pretty high. I think the bullish sentiment just, starts to consolidate at the highs, and we keep making more highs on the S&P. And if we look at the put to call ratio, switching to, how many people are in options, the derivatives market, puts to call. Let's take a look at that. All right. Now for this one, you got to go to the line if you're on trading view. And I made it actually a new, let's go internals, market internals. So put to call ratio peaked out. What is this, January? This was on Wednesday. So you can see Wednesday peaked out. That was at the same time that the exposure peaked out, and that was the same time that the bullishness peaked out. So once the put to call ratio peaks out and starts to come down, that's it. This is a sign that the bears are giving up to some degree. They're giving up. What was the signal? I don't know. What was the signal? I think we still got to look at the dollar. We still got to look at yields to see the treasury market. Are rates going up? Are they coming back down? And I think we're at that level. Now, how many stocks are above their 50-day moving average? This is another market breadth indicator. We have 71% of stocks, right? And it looks like they're starting to catch up. What date was this? This was the big Fed meeting, or this was an inflation day where all the stocks just started to lift. Now we're back to where we were at that consolidation when it pulled back and supported. So you're getting market breadth. There's a lot of stocks moving up, a lot of stocks moving down, but for the most part, market breadth is still here. Or there's a wave, right? If you look at all the percentage of the stocks in the market, most of them are still, above the 50-day moving average. So they're showing that's showing a lot of momentum is still picking up in the market. We still have momentum according to that. Now this is internally, is there buyers for equity debt? Yes, there is. So when this declines, that tells you there's, big capital investment, a lot of capital. This isn't really retail investors, but big investment firms, right? They're going into corporate debt. So if you're piling into corporate debt, you're expecting equities. This is bullish for equities because you're not buying U.S. Treasuries, you're buying more equities. And we do see bonds start to fall, or, Treasuries actually fall here, but there's a lot of debt buying for the equity market. You're buying that debt, you're expecting a return on that debt, and it is fixed income. So this is the fixed income market for treasuries versus equities. And more people want equities, or more big firms are wanting to get in that equity, exposed to equities versus actual treasuries. So they're not seeing a recession here, right? Now there still will be treasury demand because it does pay fixed income, but if you get all the fiscal policy, all the growth, if the ISM starts to go positive, then I think treasuries start to run out of juice here, right? Maybe in the second half of the year, and you see, a bigger piling into, equity debt. Equity debt is basically just, paying. You're going to get an increase on the equity and the debt at the same time. So that's just a bullish signal for the market. Now the yield curve, everybody's upset. Oh my God, the yield curve is still inverting, or it's now starting to revert. So we should see a recession here. But the real issue is the yield curve going up. Yeah, this usually signals there's going to be a recession in the next 12 to 16 months. Maybe there is, maybe in 2025, but we haven't even hit, we still have a big cushion. There's still room to cut rates. There's still a lot of room for the Fed balance sheet or Fed liquidity or money supply to come back into the system. So I don't see that happening anytime soon. If you get a black swan, sure, this doesn't predict black swans. This predicts basically, when collateral is upside down. But you have the bank term funding program, which we're going to get to. That's the risk of liquidity. The bank term funding program is set to run out in March. So that's when I think the S&P actually pulls back, is late February, March, if we continue to go for all-time highs. If we continue in this trajectory higher, so let's go to SPY. If we continue higher here, and yeah, this was a pretty big breakout. I don't know how far we go, but let's say we go to 4,900. I think we're headed for about 4,900 here in S&P. What do we get? Yeah, okay. So yeah, we're headed for about 4,900 in my view, and it'll be a blow off top. The positioning is still very bullish, right? We didn't really come down that much. So I think we get a spike to, and the Qs are exploding right now. Semiconductors, a lot of chips. The AI story is not over yet. And then a lot of people say, well, AI, this is a tech bubble. AI is not real. Well, it is B2B, right? Business to business AI is huge because it is reducing your cost. And, you're going to get more revenue. You're going to get better profits out of that. So I think we get a blow off top. And then we see positioning get a little overdone, right? Too many people piled in. They're going to collect profits up here to some degree at some point. We probably come back and check, the all-time high. But I think we come up here first. And then at the same time, once we get over leveraged in the market, once the market gets a little over leveraged, we're probably going to see that bank term funding program and the RRP liquidity run out. So that's just liquidity for capital markets. Once that runs out, everybody's going to, the S&P is not going to have a whole lot of, confidence that there's more, because there's a liquidity crisis only if the Fed doesn't step in. So you got to bet against the Fed or against, the fiscal authorities. And I think at any sign of weakness in the consumer economy, because consumers are 70% of GDP, any sign of weakness, we're already seeing Joe Biden, right, or the fiscal authorities, I'm going to try to say that, we're already seeing him, create more stimulus. So I expect that just to continue because it is an election cycle year. It's an election year, and he's going to do everything he can to make sure the consumer doesn't fall off a cliff for the economy. And then it's going to be up to the Fed. What are they going to do about the reverse repo, fallout? The reverse repo liquidity. Let's go to this. Here it is right here. Reverse repo liquidity. You can see it's falling. Let me get rid of that. Actually, we got to turn it upside down so you can see what it really looks like. So here's the zero bound, right? This was all the liquidity that actually supported the market. So again, everybody was wrong about the yield curve because they didn't see that there was still QE happening, right? Or, they were pulling the Fed balance sheet off. They're taking cash out, and I'll answer your comment there. But there was cash coming into the system to buy up all the U.S. treasuries to support the treasury market. So all those treasuries that came on, or all the debt that was printed from the fiscal authorities or from the White House, all that debt that was created was pretty much bought up by the RRP. Now, what debt was actually being bought up? This is why I think there's so much liquidity in the system that isn't being accounted for. If you go to the 3-month treasury yield, well, you're getting 5.4%, upward of 5% yield on your cash in 3 months. Every 3 months, you're getting 5%. That's insane. So all these banks have to buy treasuries, but what's happening is they're yielding off the treasuries. So they're getting so much yield that, they can just increase their collateral, right? So forget the bond market falling. They can increase collateral because their cash is actually going higher. Their cash is going higher. Yeah, the Fed balance sheet might be lower, but the bank's balance sheets are actually rising, which is why you're seeing really good bank earnings for the big banks. And regional banks, they need to rely on the Fed bank, the bank term funding program. They're going to have to rely on that, but that's running out, which is another risk to the market. But I expect Janet Yellen to come out and say, oh, they're going to start a new program for the regional banks if they continue to suffer here, right? So liquidity is a concern end of February, March. But for now, we did break out. There's a lot of pressure to the upside. So maybe 40. Nobody knows. Nobody knows where we're headed. But we got to watch the sentiment and positioning. Once it gets a little overdone, overconfident, we're going to pull back to some degree. Peter Griffin, what up? I scalped a short before it took off. Would have been nice to cash the long side. Yeah, a lot of shorts are basically getting squeezed there on the upside. That's what we're seeing. Shorts getting squeezed, right? Shorts, everybody was shorting this. You're seeing all the perma bears are basically saying, hey, we're going back to, 4,400, 4,300, 4,000. They were all wrong. They got squeezed. And this is simply because the economic outlook is better than expected. Even though the economy is slowing, well, the market is anticipating that the Fed steps in, and the catalyst is when your economy slows to some degree, well, the expectation is that you're going to get more liquidity. That's just how the market works. And now that we are slowing, well, the market is already front running the Fed rate cuts. So I think we come up here, and then when the Fed actually does decide to cut or not, the market's going to pull back. But that's not something you can predict. It's just the expectation that the market front runs, what the Fed's going to do. And right now it's front running rate cuts, not because of a recession, but because things are, inflation is coming down significantly. And that's your real catalyst, is inflation is still falling. I don't know where these ideas are coming that inflation is going back up. Historically, as long as inflation is below 3.5%, bull markets can continue to go up, especially with the the productivity picking up from AI, from technology, from blockchain. JP Morgan just released a white paper on tokenization of assets, and what they're saying is that the banking sector can save or create about $400 billion of revenue using blockchain technology, right? And they already have the technology to do it. So profit margins continue to rise, and then you get the Fed cutting rates or increasing more liquidity there. So that's what we're looking at the moment. Just wanted to give an update on what we're looking at. I'm working on some stuff behind the scenes to quantify all this, or to make it a little easier to see. But it's a lot of information. Either way, technically, the market is looking pretty good. Okay, so we'll go over some technically what we're looking at here. Let me see where the Q's at. Yeah, Q's had a big big up move, or a big blow off top, gap up, and then just ran higher. And this is because of the semiconductor group, right? Where's semis at? Semiconductors, I'm pretty sure they're moving up. SMH is one of the ETFs. I mean, this thing is absolutely exploding, right? Semiconductors, why? Because, again, in 2023, at the end of 2022, a lot of companies, they just didn't spend on their businesses, right? They were expecting recession. They were expecting that lending would collapse. And we've already showed you on some of the other charts that commercial real estate lending was down, and it actually reversed. So now that lending is coming, lending is the tightening standards are easing, and that's just a signal that, hey, we can now start spending on business a little more. So what are they buying? They're buying technology. They're buying semiconductors. Apple, Amazon, Google, they're all going to be spending billions of dollars on chips, right? So that's why you see AMD and Nvidia exploding. And they're going to try to create their own AI models, or just apply it to their business in any way that they can. So Nvidia before earnings, and this is I mean, if you were Nvidia beforehand, great, but Nvidia is just a monster at this point, right? It's just a monster, and everybody wants to short it, and you can, but good luck trying to short Nvidia. My guess is it just keeps running up into earnings, and then after earnings, it's going to have a pullback, or before earnings, it has a pullback. But this is a pre-earnings run up for Nvidia. A lot of shorts got squeezed there because there's just too much positive sentiment with AI, too much positive sentiment for semiconductor investment, a lot of semiconductor investment. And I think the next big wave here is energy storage, or in other words, electric vehicles. Now I know Tesla's getting crushed. So this is where the opportunity is at for me, right? Tesla finally getting to that level where, it is very oversold, right? We're finally in that sweet spot. This is the sweet spot that we've been looking at for a while, which is, you're overdone, right? The RSI, or the selling pressure, is starting to become very exhausted. You get that exhaustion. Well, shorts are going to cover at any time. Anytime you see the price go above a certain level, shorts are going to start covering. So can it go lower? Sure. But you're in the sweet spot, right? You're in the sweet spot. Last time we bounced at this 206, 205 level, I thought we would get there. We could still get there. Tesla's pretty volatile, but you're at the sweet spot, right? You're at the sweet spot as far as this. And I think it's time to take a look here because when it does rip, it does rip. The only headwind here is you do have earnings, and Tesla cut prices again. So that's the big worry, is that they continuously cut prices, but the other competition, their competition is giving up. The competition is giving up on creating EVs. When you hear there's no EV demand, no, there's no demand for other EVs. There is demand for Teslas. There's no demand for other EVs. So they're pretty much taking the market here. And, price does determine a lot of sentiment. So when soon as price breaks out, here comes all the positive stories, because the institutions are going to flip. They've been shorting Tesla like crazy, and they're going to flip because there is no other, OEMs. They're done as far as creating electric vehicles. They're going to try, but everybody's now capitulating to the Tesla supercharger network standard. And if they do mention at all on the earnings call, what is this, the 24th, right? If they do mention at all that they have a license from Ford or GM for full self-driving, if they do mention that, this can be a huge catalyst. It probably goes to 300 pretty quickly, but I really doubt they do that this time. I doubt that. Also, if they do have some optimism on raising prices because of rate cuts, that's also going to be optimistic. I'm not really too optimistic. I think if we do bounce, we're going to have a bounce here on Tesla at some point, but I don't know if it goes back up. There's a lot of headwinds again for Tesla. It might come up, come right back down, but this is the opportunity to at least leverage on a momentum play right back to the upside. Probably fills the gap here at 227, possibly 233. And it really depends on the earnings call, right? How that actually plays out. But it's oversold. It's extremely oversold. And this is a really big opportunity for Tesla. And while in the background, they're starting another gigafactory. They're going to start building another gigafactory. So their production is just picking up considerably. And it's a mixed when it comes to fundamentals. It's really mixed on what could happen, but nobody's really competing with them long term. And I think everybody knows that at this point. So yeah, you have Tesla exploding, AMD all-time highs. And it just keeps going. It's squeezing. It is squeezing like crazy here. A lot of people probably try to short the last high, but it is pretty much squeezing here. I wouldn't short it, but again, you could probably short it if you get the overall market. But AMD is pretty hard to find. AMD is hard to find the top or the bottom. So you're gonna have to wait for the overall market to calm down. At this point, they're coming out with new chips, right? So you got NVIDIA, you have AMD, you have TSM also. I think TSM is moving up. Taiwan Semiconductor, tremendous growth. There's just so much growth in the semiconductor industry. Now, what is that? Manufacturing. This is part of manufacturing. And, the fiscal authorities, what are they doing? They want to onshore all the manufacturing, which is why, you're not really going to get unemployment spike. You might get it creep up to 4%, but you're not going to get a real spike in unemployment because there's too much investment from businesses and from the fiscal authorities in the manufacturing sector, whether it's to build apartments, to build smaller houses, or whether it's for semiconductor chips. There's just way too much investment coming in. It's not showing up in the data yet because the data is always lagging, but the investment is there. So you're getting and the banks already know this, so the banks are front running most of these moves as they collect interest on those U.S. Treasuries, right? On the short-term date, on the short dated Treasuries. So I think I'm not going to say they're selling Treasuries, but if we go to Treasury bonds, this is the sweet spot for Treasury bonds. This is where that reverse head and shoulders is. But what's going to drive this higher? It's going to be a weaker Q1. All the data we're seeing right now in the economy is from Q4. It's from the Christmas run up. So it's a lot of strong data, which has us in this decline. But when Q1 rolls around, which ain't going to be till February, because the February data reflects January, that's when you see the weakness, and then U.S. Treasury bonds will bid back up because bonds move higher, at least Treasuries, they move higher when economic growth starts to slow. So people are going to want to get some of that yield or that interest paid to them, not retail investors, because you guys are trading, you're not really collecting yield. They're going to want that yield. Big institutions are going to want this yield. They're going to stop selling bonds, start buying them up, because there is the risk of liquidity running out. And if liquidity does start to run out and there is no response from the fiscal authorities and the monetary authorities, then the only outcome is really that bonds go higher. And also you have the Fed, starting to talk about, no longer draining the Fed balance sheet. What is that? They're selling US Treasuries. They've been pushing this down for the last 2 years. So if they start making the talk that we're going to start buying them back or slow down the pace of drain, well, that's a catalyst for Treasury bonds to go higher. So they should go higher, I think, February, March, April, May. But as the ISM starts to expand, I don't know if I have the ISM on here, but as economic momentum, here it is, forward-looking economic momentum starts to move up. And this is, let me see, do I have it at the 50 level? We're still in negative territory here for ISM. This is manufacturing activity or forward-looking momentum. So as this moves positive, which is green, it bottomed out. What was this? This was January 2023. So when it did bottom out, that's when you had the big run up. So notice how the S&P from January 2023, the Qs had a 50% upside move, right? Second biggest move of all time for the NASDAQ. And that happened to be around when the ISM forward-looking growth momentum indicator bottomed out. So it's been climbing and it's not even positive yet. Once it goes positive, which I don't know when that's going to be. It could be February, March, April. I'm thinking March, April, it goes positive because of all the infrastructure investment for semiconductors, for manufacturing, for multifamily homes, for apartments, right? Maybe not housing yet, but you do see the home builders starting to pick up. Once this goes positive, that's the lights out. That's the big bull signals. Until then, we have a lot of volatility, but the bull signal is, okay, what are you going to do with the bank term funding program? Are you guys going to create a new program, right, for these regional banks to stabilize growth or stabilize their balance sheets? And then what are you going to do about the RRP? Are you going to just let it run out? Or are you guys going to start your Fed, are you going to cut rates? Once they cut rates, this thing is going to take off, and that's forward-looking growth underneath the hood. Right now, it's still bottoming out. So we'll see how that plays out. So my whole point is once this goes positive, there's not going to be a whole lot of momentum for Treasury bonds, because that's going to signal, well, if the economy is starting to expand, then, why be exposed to Treasury bonds? Because stocks are going to do a lot better than Treasuries. Obviously, that's a risk on move there. So I'm watching the ISM to see when it turns positive. That's always a big, that's a big indicator for crypto. Crypto moves much higher when the ISM starts to cross positive. So I'm keeping my eye on that too. Check Celsius, please. What is the ticker symbol for, you got to give me the ticker symbol for Celsius. I don't know what it is, but you got to give me that ticker symbol. But, outside the ISM, if you're just looking at bonds, it is a technical setup, right? And remember, this is the opposite of 10-year rates. So another reason this goes higher is on a fundamental basis is that growth is slowing. So interest rates will come down, and interest rates are inverse to bonds. So your 10-year rate is probably the benchmark rate you want to look at. And I think it's peaked out. This is my favorite way of just looking at all the macro and the data and saying, okay, what is the bond market actually doing? Well, it got past this level, and it could still climb up here to this level. But why would it climb higher over the next 3 months? It could still get there, but why is it going to just go? Because you're being told rates are going to 5%. I doubt it, because the economy is slowing. That's a argument against rates going higher. The economy slowing. Number two, inflation is still falling like a rock, right? Now, it's not falling like a rock month to month, but the expectation was that it would be back above 5%. It's not there. It is slowing. We get core PCE January, in about 7 or 8 days, we get core PCE. That's going to be the next catalyst for the market, because core PCE is basically the Fed's preferred inflation gauge, okay? Now, there's already expectations that it's going to be at 2.9%, 2.8% core PCE. And if that's the case, I think the market can it just keeps ripping higher until there's till we get oversold, extremely overbought. And when that core PCE comes out, these rates are coming back down, right? Or maybe they just move sideways in here. Number two, you got the dollar as another catalyst for stocks to go higher. The dollar is almost at the target, right? I'm not trading the dollar, but when I look at the dollar, it does tell me as it moves up, stocks, crypto, whatever risk assets should either move lower or just consolidate. So we're seeing Bitcoin consolidate, but that has nothing to do with this. That has to do with more of the fact that the ETF came out. What do we say? When the ETF came out, you're probably going to see a slight run up and then a sell off. We did get that. Now it's back to neutral on the fear and greed index. But the dollar anyways has a little more room to run up. So I don't know where it goes, but ultimately once the bank term funding program is figured out or the liquidity risks are figured out, the dollar is going to go back down because, the Fed's going to have to print money. So I'm watching the dollar too. Now it did break out of this trend, but it's at the middle ground. If the economy slows too much, then, the dollar could move up because there's a risk off event, but it's only going to move up if there's a sign of a deep recession. There is no sign of a deep recession at all. Unemployment is still, at record lows. Jobs growth is still there. Payrolls are still there. They probably ease a little bit, obviously, because, these are the slow months. Plus, there's a lot of tax. People are going to have to pay taxes February, March. So some of that liquidity in the market will probably leave the market. But after that, right? So I'm thinking March, April, you see the dollar really start to roll over. So it might creep back up to this level, but nothing, it's not going to spike unless you have something really wrong happen where oil goes up or rates start to move up. So I'm not seeing anything systemic for the dollar to move up tremendously. It looks like it wants to roll over at this point. So dollar rates, you're looking at those two. And we'll see how rates move up. I think bonds are going to, catch a bid here. Plus, you needed, rates had to go up to some degree. They were extremely oversold or bonds were extremely overbought. So I think this is the bottom for bonds. You get that gap fill. I don't know if bonds really move to gaps, but it's getting to the level of oversold, and that's when you start to turn back up, or at least the pressure is, and everybody's watching this reverse head and shoulders. So if bonds break out, yields come down, stocks go much higher, especially with the Fed cutting rates, and especially with fiscal policy coming right back in, or more liquidity into the market. So BA, okay, we'll do some technical analysis. Intel, Celsius, the drink probably. Yeah, I don't know what the drink is though. What is the ticker for Celsius? I'm pretty sure it's overdone. What is Celsius? I don't know what Celsius is. Oh, here it is. CLA. I think it's CELH. Celsius. Oh, it had a nice pullback, huh? All right, this looks like a good setup. I like this. This is a good setup. Let me pull this down. Now, this is a pretty good setup because, Celsius has had a monster run. I mean, I drink Celsius pretty much every day. And so I like the teas. I don't like the carbonated one, but I do drink a lot of Celsius. And this has a lot of demand. So you already had that big run up. How much did it run up from? We're going from April, May. Now let's see where that gap up. So from that gap up, it ran up 70%. This is a good mover. It has a trend behind it for sure. Upside trend. Let's draw that trend. See what we're looking at here. So Celsius does look pretty good. Nice sell off today. Where's earnings at? Okay. Earnings, it's probably going to move down into earnings. And once you get the earnings report, you'll see if that trend continues to move higher. I'm pretty sure it does. Celsius is looking really good. And let's see where it's moving with the moving averages. What are we seeing here? Okay. Now this is I got the 10-day. These are different moving averages. Let me edit this. I changed the inputs here. So 50, 200. So that's a 50 and the 200. Let me take off the quick and then leave these on. There we go. All right. So yeah, it's right on track. It's right on the trend, right? Celsius is coming into the trend. The only issue is you have earnings out here, but I mean, I would take a look deeper at this trend because it's moving into the trend. There's support down here at the same time, and you have the 200 daily moving average at the same time. So you got multiple points or variables for support right here. And this was that gap. See, it filled the gap and then it moved higher. Now it's coming right back down. So a lot of consolidation there. This is actually a really good play or a good setup if you're looking at Celsius. So your support is somewhere around 50. You want to see the hold to 50. You probably want to put your stop at 48, somewhere around 48 as your stop. Maybe it does come into 48, but if it can't hold 48, it's probably done. But this has a lot of momentum, so it's looking good. Celsius the drink, BA Intel, INTC. Thoughts on BA? Me personally, I don't really like. I know it's sold off a lot, but these are tricky because there's so many regulatory issues going on with the airlines, and you could get the bounce here possibly, but I think there's too many issues with the airlines, and there's always some news with the airlines. So I'm not interested in BA, but I mean, shoot, they're probably going to get supported by the government. They always are, either way. So this could be a sell off. Now that the market's moving up, the overall market is, breaking out. You could get, Boeing doing pretty well. I would just watch out for earnings. I honestly, unless it has a real catalyst to it, I would wait till after earnings, right? Earnings are too volatile. You could get a gigantic gap down for Boeing. It's more likely you get a gap down because there's more issues that you're just not going to see with the company. And I would be careful. I wouldn't be interested in that. Celsius is totally different. Celsius has a pretty good. There's no issues with Celsius unless there's some type of somebody suing Celsius because of the ingredients. Blah blah blah. Who knows? But other than that, BA looks on trend. But I would wait till after earnings to see what it actually looks like. What else we have here? Yeah, that's Celsius. Okay. Let me pull this back a little more. There we go. And big tech is just moving. Big tech is really strong. Big tech looks really good. Competition in the BEV market. I don't know if there's any competition. I really don't. I mean, I'm sure they're always competing in the beverage market, but Celsius is a really small market cap as far as I know. It probably has a lot of room to run. So I don't know if there's any competition. I really don't know. I don't track. I don't track. This is one of those. It almost looks like Monster back in the day. Monster had a monster had a monster rise when it first came out. So I think a lot of people are tracking this just because of the potential for that revenue. I mean, people are buying this product like crazy, not Monster, but it is competing with Monster, right? And look at this rise for Monster over the past, what is this, 3-4 years, 5 years? Oh no, this was back in 2010. Okay. So, but it does look like it could do something like this, Celsius. I wouldn't bet on it because I don't know much about the industry at all. So I wouldn't bet on it. But if you do your research, I'm sure you could find a good fundamental catalyst. You want your fundamentals to align with the technicals. And, the only issue is we are going into a slower consumer January, February, March, which is going to reflect in February. So I don't know. But hey, people love their energy drinks, right? IWM, that's a good one. IWM. Let's see. For small caps, Tom Lee's been calling out small caps. I think they filled the gap. Tom Lee has been calling out small caps as to move about 50% this year, outperforming the Qs and the S&P. I think this is a good setup for the small caps. You can see it's supporting that 50-day moving average. Nice clean pullback. So did it ever fill the gap? Oh no, it just got back to support. So this was a pretty good support area. Yeah, maybe a couple more. Maybe you want to see a little more consolidation. I don't know if it slows down, but IWM does look pretty good. Was there any entries today? See if there's any pattern entries that we could see. Well, it did. Now, this is mostly just price action, but it looks like it did turn that previous resistance into support. So I would look for one more pullback into, if you're looking at IWM, I would look for one more pullback into this previous resistance level. No, I'm not looking for that. Here it is. So you can see resistance, and this is around what, 191. Somewhere around 191, 190, 150. If it does come back and boom, right there, and then it breaks that trend, I'd look for volume to confirm that. So yeah, IWM looks solid, and IWM is just basically anticipating, because these are interest rate sensitive companies that have been extremely sold off, and they're going to start playing catch up. So if rate expectations continue to come down, then IWM should be moving up a lot. So it's just people are not positioned in the wrestle. They're just not positioned. So what I'm thinking is everybody who missed the rally, or the big institutions who missed the rally in in the Qs and Nasdaq and the S&P, because they're expecting a great recession, they're gonna have to chase something to for performance, and typically they're gonna chase the IWM or the small caps, the Russell. So yeah, IWM probably hasn't. I would just look at those levels, and once you clear back above 200, I mean it's off to the races from there. Once you clear 200, you're off to the races for the small caps. And you got support on the 50-day too. That is a golden cross, so you're getting momentum. You got to pull in right to that 50-day. That's good momentum. So yeah, I like that. How long have you been trading for? Probably about 5, 6 years. Not like super consistent trading. I'm not like a super trader. I'm more of a macro trader. I'll do some stuff here. I shorted the S&P last week from 477 to 472, 471, and so I'll do some trades here and there, but I'm not like a super day trader. I think that takes too much work, and I like to create content. But right now, I'm taking a look at Tesla. This is not financial advice. This is not, you know, this is by no means, hey, go do what I'm doing or try what I'm doing. But I'm looking at Tesla because it's extremely oversold. And I rather take a 2 month trade or maybe a couple week trade. I'm more of a swing trader. But trading is very hard. Everybody should, everybody can invest. Not everybody can trade. Big difference. Takes a lot of work and a lot of concentration. So yeah, that's IWM. Dow. I don't know if there's any. Oh, look at Dow's going all time high. So this is big market breadth. You're getting the S&P all time highs, Q's all time highs. Now IWM, not IWM. I'm sorry, the Dow back to all time highs as we are speaking. So there's a lot of market breadth. I think we had a big flush higher, not a melt up, but a big. Everybody's going to leverage in on this, and this is perfect really for crypto because now sentiment is picking up, and crypto is at neutral. So I still think, personally, not financial advice, crypto's the best trade by far because Bitcoin has already pulled back considerably, right? And you now have the ETF online, so there's going to be a lot of positioning. Pulled back about 17%. Typically in a bull market, you're going to get a 20% pullback. As Bitcoin moves up, you're going to get 20% pullbacks. And what everybody's looking for is, I want the ETF. Everybody wants the ETF that has leverage. Everybody loves leverage. Humans love leverage, so they're going to be looking for the ETF. I don't know if they have options yet, but whether it's the BlackRock ETF or the ARK ETF, they're going to be looking to leveraging calls. And when you get that 20% pullback, it moves up a little bit. They flush out all the call volume, and then it just explodes higher. So yeah, I think Bitcoin has a clear path higher, and it's already about 50% from the highs, 50% retracement. But it could also collapse a little more to shake people out. Maybe come down to 38. There's some consolidation right here, but for the most part, yeah, crypto's looking good. Ethereum, I think, looks better than Bitcoin at this point. Moved off of that level, that $2,500 level, and looks like it's supporting 23. It could come back down to 21, but again, these are more macro cycle trades. I would never advocate, to trade this stuff daily unless you're a professional. Don't mess with it. But macro wise, we're at the beginning of the cycle, right? It is crypto spring, and crypto summer is when you really start to peak out. And then fall is the end of crypto, which will probably be like 2025. You got a lot of time here. What'd you say? Here's a strong one. Polkadot ecosystem interoperability chain development. ASTR use Binance chart. Oh, okay. ASTRUSD. I don't know what this is. This is what is this? Some type of chain on Polkadot? Should be on the log. I don't know why I'm not on the log. Yeah, it looks strong. I don't know what it is. Again, I have no clue what it is or what it does, but it is it's crypto spring, so everything's gonna spring higher. That's kind of what it means. Crypto spring, when everything pretty much dies out in the wintertime and then the growth starts to pick up again. The seeds start to sprout. That's what's happening in crypto. And never chase anything. You always want the sharp pullbacks. Now, I don't know what this is. I don't know what it does. I have no clue the fundamentals, but probably goes higher for a while. You can't do too much technical analysis on these because they don't have great patterns. They just explode off of sentiment, especially with regulation coming in for Bitcoin. Pendle USDT for trading Ethereum yield derivative assets. Okay, Doifer, I see you. That's too smart for me. I'm not that smart. I don't like yield in crypto. Yield is always very tricky. Yield is I don't like to mess. I know a lot of guys that were farming a lot of yield, and they got crushed with the Terra Luna collapse because it just takes one bad code or one hack to destroy everything. So I don't mess with yield. But kudos to you if you know what you're doing. Let's see what else we got here. Obviously, I'm still looking at Chainlink. A lot of good news. Like I said, JP Morgan came out with that white paper on basically how much money tokenization is going to bring to the space. Nobody's even close to. Check the chart though. Oh, the chart. Is that? Let me see. Is that even? That's too many letters, isn't it? Okay, yeah. I guess you can. This is on Binance chart. Okay. Yeah, exploding. Okay. I don't know I want to see the market cap because a lot of these they will explode from 100 million, they'll go up to a billion and then they get stuck around a billion, 2 billion market cap. But whatever this is, it's moving. And this is off the Binance chain. I think Binance is ahead of Solana. Now that looks like a good this looks like a good this has some good price action here. Nice little pumps. Everybody waits for that pullback and explodes higher. So this looks good. But this is not something I would mess with. But the price action doesn't look too bad. Looks like when it does pull back, it's pulling back a good 20%. Typically you want, 20% pullback and then the bottom is somewhere around there. But you don't want to do that when Bitcoin is, falling. You want to see Bitcoin moving sideways. And yeah, it looks like it has a little range there. It's about to break out of this range. 800 million and then 400 million. Okay. And it is a crypto market. So it's going to have somewhat of, there's a lot of small market caps and we're in crypto spring. So you have a cushion because it's just getting started. You have a big cushion here. Unless some more regulation comes out, then you might be in trouble. But if this is on Binance, then, I don't know. I don't know how you get a hold of it if you guys are in different. Coinbase, I don't think Coinbase will hold any of this. So it just depends what exchange you're using, right? Winners will keep winning. Yeah, they should keep winning, especially with the Fed cutting rates and the ISM moving up or momentum picking up. So a lot of these will win. You like Celestia TIA USDT? TIA USDT, huh? I don't even know what these are. Let's see what this is. What is this market cap, Doifer? God, goodness sake. Yeah, these things are moving. Some of these things are moving. This is crypto spring. What is this up from October 2023? So the bear market, it's up 3,000% already. This would have been nice on that consolidation. This was like a perfect entry right here. Right? Starts to consolidate. You get a lot of consolidation. You get an actual bottom there. and then it moves up. You get another one here, moves up. Looks a little suspect now. But again, I don't know what it does. If you know what it does and you believe in it, good luck. Imagine if Tesla moved with the market. I know. Yeah. Tesla is a little suspect because it's just not moving with the market. It's doing the very opposite. But that tells me there's a lot of shorts leveraging up in Tesla. If that earnings call or that report is not as, destructive as the institutions expect, they're probably going to cover their shorts. So we'll see. It is popping up here. It looks like it's starting to bottom out finally. Finally. You keep thinking, oh, this is it. No, this is it. No, this is it. We'll see. There hasn't been a whole lot of volume yet, but we got to wait for earnings. Head and shoulders, possibly. It doesn't matter. We got to wait for earnings to see what happens. But that extremely oversold signal is here. This is the territory for Tesla to pop. Does it go all the way back up? Maybe, maybe not. But it is a signal that there is, this pressure needs to release at some point. And somewhere between 220, 230. And if there's a good outlook, it could just move all the way back up to 260. And if you get a real surprise, you're going back to 300. I really doubt that. There's a lot of uncertainty, but that also breeds positioning very negative. And if you have to cover, once it starts rolling, everybody piles in. So we'll see where it goes at. 208 is the low right now. 207.50, I think it hit today. And market's breaking out. There's a chance this moves higher, though. It needs to get back above 212, which was that last. Yeah, it cannot get above 212 right now. It cannot get above 212. If it gets above 212 and holds, then I think we're going to have a mini run for sure, especially with the S&P and the NASDAQ breaking out. Even though Tesla hasn't really responded to that, it could push a short squeeze unless you get more negative news. So I don't know. Would you say Celestia is a modular blockchain on Cosmos ecosystem, which means the consensus layer is separated from the settlement layer? So there's flexibility for developers to make dApps without using layer one, right? That is smart talk right there. Nobody knows what you're talking about, but it sounds good. And this is on, you said this is on the Binance chain, right? Doifer, where are you from, Doifer? Flexibility on the developers to make dApps. That sounds good. I mean, it sounds good. Everybody's doing something. But I have no clue. I have no clue how to interpret that. The crypto market is fast moving. It innovates really quickly. And good luck with Celestia. Because everybody has their whole thing, right? My thing is who's adopting it. Does it have room to run from the fundamentals? Because everybody has their whole, I have a layered chain that does this and consensus, blah, 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 right? There's all kinds of stuff out there. And I think the real question is, can you do something different than Ethereum in Polygon? Cardano's still out there. There's so many plays that may never play out. XRP, right? If you get an ETF, we go higher. If Bitcoin goes up, it probably goes higher for sure. But again, good luck. I hope it goes higher. If you're holding it, I hope it does go higher for you. What about Save going into Monday? Okay, yeah, we'll look at Save. Save's a little sketchy at this point. Yeah, I've been probing Tesla with small orders to the upside. Still nothing solid. Yeah, there's no real volume yet. Same thing for here. For me, I caught something around here and then I got out because it just couldn't hold. And then today got in a couple contracts at 209, 207. We'll see if it holds up. If not, we're around that point where it's almost done. It's almost done. And if it does dip higher, then you just have to hold it if you're swinging it, and it hopefully doesn't crush you. But here's my guess, carbides. My guess is we get a big gap down, and that's the bottom. My guess is we get a giant gap down either after earnings or sometime next week. We have earnings next week, so you might get a big gap down, and that's the bottom for Tesla. There's a built-in buy pressure because new projects must buy TIA token to make their dApp. Okay, Doifer, you're too smart for us, bro. Too smart for us. So more DApps, more TIA asset appreciation. Okay. Good luck. Good luck. I don't know how to analyze all those little layer twos, all that stuff. So I don't really have good feedback for you. But again, like I said, I hope it does go higher. The price action is extremely bullish. So right, we just want Bitcoin dominance to slow down and pick up those altcoins. So somebody asked about Save. I know Save was getting crushed. Dave Portnoy went long Save and got crushed. It's too wild. It's too wild going into Monday. It's pretty wild. There's a lot of uncertainty here. So this is a trader's dream to be able to short and go long. When I say trader, it doesn't mean just because you can push a button means you're a trader. This is way too dangerous for 99% of people. Way too dangerous. So I mean, you need a catalyst here, and you need to see a good pattern form up. Higher highs, higher lows, right? It's probably easier to short at this point. If it drops this level, 662, it probably tries to fill the gap all the way back down. So these are typically easier to short at the level because of all the negative news. But again, I don't know exactly what's going on with Spirit Airlines. Every day there's some new stuff coming out. You got to keep up with it. Find somebody on Twitter who knows, who can track the data. Maybe they get bought up, who knows. But yeah, Save going into Monday, I think it's easier short for sure. I think it's easier to short this thing. But it's not easier for most people because trading is extremely hard. Not recommended. Maybe it comes back down to 5 though. My guess is it's back to like $6 next week. That's my guess. It comes back down to $6. Looks like it's kind of selling off right now into the close. You see that we're headed into the close. Nobody wants to hold this over the weekend. Nobody wants to hold Spirit Airlines over the weekend. Carbides. Who does Chainlink compete with in regards to their technology? Who do they compete with? They don't really have much competition. There's some people that are trying to do what they do, but nobody's at the same level as them. And I'd say their best competition is, who's another interoperator? You could say Polkadot, but nobody has the transaction volumes, locked value. Nobody has the security system with chain. I don't think they compete with anybody, which is why I'm so bullish on it. There is nobody they're really competing with. And the comparison would kind of be like Amazon AWS, or you could say there's other networks, but they're going to fail because they have no adoption. Now, if you compare Chainlink to adoption, nobody's competing with the Chainlink. It's not even close. They're working with Swift. They're working with DTCC. They're working with, it's only a matter of time, Euroclear, a bunch of banks. So no ANZ, Australian Bank, and Chainlink CCIP, nobody's competing with it. So there's not really competitors. There's a lot of people who will come out with the chain and say they compete with Chainlink, but they really don't. I don't even know their names because none of them come close to it. And there's so much froth, honestly, in this space that I don't want to just say because there's another proof of work, or not proof of work, but proof of reserves, or interoperability coin that they're competing. Right? Just like if, somebody comes out doing electric vehicles, it doesn't mean they're competing with Tesla. They need, like, BYD is probably the only other electric vehicle company who's competing with Tesla. NIO is not. They're dying. And I got to watch what I say on here. So nobody's really competing with them. I don't, in my view. You'd have to ask my brother though. He probably knows more details, but as far as I know, nobody's even close. Polkadot is supposed to be interoperability. They have a lot of funding. Pretty big market cap. Polkadot could be, but they have no adoption, basically. Nobody really has adoption compared to Chainlink. Band Protocol API 1.3 and also XLR and Polkadot AXL. Okay, there you go. There's your competitors with Chainlink. Are they really competing? Not really, but those are your competitors. I'd say Polkadot's probably the closest because they have some history. Yeah, Chainlink has a lot of products. Yeah, they have a lot of products. So they might compete with some of their products, but if you take the whole package, nobody's competing with them, right? Proof of reserves, CCIP, definitely nobody's competing with. Chainlink functions, there's a lot of stuff that they do that is really nerdy and nobody's really competing with them. Chainlink functions and Chainlink verifiability randomness are two other products besides oracles, right? So there's some competing oracles, but when it comes to the full package, no one's competing with them is what I'm saying. And then, yeah, I mean, that's pretty much it. I don't really invest in anything that has a competitor. It has to have no competitors, no real competitors anyway. They just got to execute. They have the adoption. You hear it. You hear BlackRock. You hear the World Economic Forum talking about tokenizing. What did Jamie Dimon say the other day? He said Bitcoin. He tried to trash Bitcoin, even though he's probably buying it. But at the end of the day, he's saying tokenization and blockchain is the future. And again, the only way that you get blockchains actually talking to each other is within a protocol that can interoperate or connect all the other blockchains, and that is Chainlink. You have to, and you can't even build a tokenized asset without proof of reserves, and nobody else can actually do proof of reserves. So there's just so many catalysts. But Doifer, it looks like you know your stuff, bro. Yeah, there you go. Peter Thiel, competition is for losers, 100%. Yeah, you don't want to get anything that has no competition. Who else doesn't have competition? Palantir, I don't think really has competition. They just need a Snowflake. Are they competing with Snowflake? I would say no. They're doing something different, but they have some barriers to entry. Tesla, I believe nobody's really competing with Tesla except for BYD, but Tesla doesn't mean the price goes up. You need them to execute. And also with Tesla, when it comes to Tesla, they're doing a hard, interest rate. They're interest rate sensitive, so they can get hit with the market. Software companies aren't really that interest rate sensitive. So when Tesla does come out with their energy storage or their services, then they'll be a lot better. It's kind of like Apple. Apple used to just have iPhones. They were, sensitive to rates. And then once they came out with all the services, it was pretty much foolproof. See, there's Spirit Airlines just getting crushed. Nobody wants to hold that over the weekend. Anyways, what else we got on here? You think Tesla will go higher after earnings? I don't know. We'll see. We'll see how it plays out. I actually don't know. I don't have the answer to that, but I am watching the technicals on Tesla, and the technicals tell me this move is pretty much overdone to the downside. It doesn't mean it can't go lower, but there's going to be a vicious rally for Tesla at some point. Even if it does go lower into earnings, it's pricing in the worst case scenario right now. So it probably gaps down if the earnings are bad, or if they have something negative on the earnings call, it probably gaps down, and that's your bottom. Doesn't mean it goes up forever, but it's going to have a vicious rally at some point. The worst case scenario is Tesla gaps up on earnings, and then the overall market just tanks going into February, and then Tesla is not going to be able to hold up on its own without a real catalyst. I think that's the worst case. I actually think a gap down would be the best case scenario, because all the shorts are going to cover. Once the shorts start covering, you build momentum to the upside. Please do Fisker. What's the if you're gonna give me your ticker symbol if you want me to do it. Let me see your ticker symbol. What up, Kiki? SPLX FSR. Okay, FSR. What do they do? I remember Fisker. What does Fisker Technology do? Wow, they're getting absolutely destroyed. Got to be careful there. I'm going to start doing a lot more fundamental analysis on Palantir. It's my first. I'm interested in their financial products. Yeah, they have like no debt either. So the problem with Palantir is it's controversial. It's political, because it's really political. So people kind of get edgy about it. They're like, oh, I don't know. It's very political, and I can't really get into that on here. And then also it's hard to use their product. Like there's so many barriers to actually use their product. When they make that easier and they get better at marketing, but they can't even talk about their products because they're tied into politics. So that's the problem with Palantir. Over the long haul, though, it's a no-brainer. So Fisker technically, something might be wrong. What do they do? What do they actually do here? FSR, waste of time. I don't know what they do. It's an auto. Oh, if this is auto, if Fisker is auto, bro, I'm just going to tell you right now, it probably will bounce at some point and it's just going to go lower because a lot of these companies are going to flatline. They're going to go zombie mode. They cannot survive. A lot of EVs just cannot survive. They cannot survive. And it doesn't look like Fisker is going to be able to survive. It probably has a bounce, but I would never invest in this. You could trade it, but good luck. These things can have giant gap downs. You better know the fundamentals if you're messing with something like this. You better understand the fundamentals. Where's their revenue at? Are they even gaining revenue? Are they losing more? Are they paying more than they're making, right? What are the actual fundamentals? What does their balance sheet look like? What is their cost structure? How do they actually move money? Who are they competing with? I would say most of them are not going to survive. Tesla down to 185. Very possible. It's very possible we go back to 185. I'm keeping my eye on it for a Tesla. 185 would be good. It would be a nice capitulation zone for sure. That's where we got down last time. You just sold SPXL. Nice. CLF. Is this Cleveland Cliffs? Yep, Cleveland Cliffs. This is all over CNBC. They're always talking about Cleveland Cliffs. It's coming into a zone. Looks like Cleveland Cliffs is coming into a nice zone here at 17. I think we talked about this before. Yeah, we got the support there. So Cleveland Cliffs, just check this out. When this gets down to 30, once you get the RSI down to 30, it's not a, it's not a what do you call it? A silver ball. What am I trying to say here? It's not a silver ball. No, what am I trying to say? I can't, you guys know what I'm talking about. It doesn't tell you what's going to happen, but once you get down here, they're going to slow down and it's coming right back into support. So understand why it's selling off. I know why Tesla's selling off. I know why Tesla's getting crushed. Understand why Cleveland Cliffs is getting crushed and then find the support, right? It looks like 1710 or 17-ish is your support on Cleveland Cliffs. I don't know the catalysts for Cleveland Cliffs. Maybe they have a big contract. Maybe it already, priced in the contract. No clue. But yeah, good luck. Yeah, they do cars and they can't handle the heat. Can you check for me on Google? Anchor or Inc. What are you asking me to check? There you go. Crystal ball. That's what I meant to say. Sorry. I'm a little slow at the moment. Yeah, crystal ball is what I meant. It's not a crystal ball, but it does give you a probability. And the closer you get to the lows on the RSI, the more the probability there's going to be a bounce. If it has a fundamental base, if there's a catalyst to it, if the business is still set to move higher. So I don't know what they do. I would have to know. I know a little about what's driving the economy, but I don't know how they fit in. Is this a steel company? Is this a manufacturing company? Cleveland Cliffs? I'm not sure. Yeah, crystal ball is what I meant. Silver bullet. It's a steel company. Okay, it's a steel company. I don't know how they make money, but I would say that once you get commodities start to rise, I would keep my eye on copper here. If it's a steel company, copper usually leads the commodity cycle, and I'm sure steel goes up higher. So if you're watching Cleveland Cliffs, they're going to make more money when steel goes higher. I'm pretty sure, is it X, United States Steel, had a big gap up. This is a competing company, U.S. Steel. This company's been around for like, 100 years. So I don't know what the competition is, but maybe they have a good balance sheet. But I would watch how copper and the commodity complex starts to move. My guess is Cleveland Cliffs has a good business model, but they probably don't start to really gain margins until these commodities rip higher, which means you need the economy to start expanding in the manufacturing sector. So they're probably sensitive to the ISM manufacturing sector. Carbides, good luck on Palantir though. I definitely like Palantir. Again, it's just very controversial, but with controversial names, you get very outsized returns because most people have no clue what they do. Big with autos. They were trying to buy them. Oh, they're trying to buy them. Okay. I got in at 134 on Fisker. $1.34. I mean, you got to do that work yourself. You got to look up the news yourself. You could tell me what you saw, what you read, but you got to do the work yourself for the news. I don't know what they do. I'd have to go do it. Research takes time. It takes effort. So I would have to go look into Fisker. But my assumption, just understanding the EV business to some degree, right, is that most of them are not going to survive. And Fisker's selling off for a reason. Something probably broke in their business model, and they might fail, just like this company, Archimoto. Right. This is what I mean. This is another. It's not It's not full EV, but it's a company that basically exploded during the pandemic. Right. It went higher right after the pandemic because, I mean, there was zero rates. It went up 3,000% really quickly, and it sold off. And it looks a lot like Fisker, but a lot of these companies are going bankrupt, and nobody's there to buy them, and they just keep going. You think they're done. Right? You think they're done, and they just keep falling 70, 80%. And then they have a nice pop, right? Look at this. This is why I'm saying be careful with Fisker. They have a nice pop, and you think, okay, yes, we're going back. That's your emotions. Boom, gap down, goes even lower. So, yeah, I wouldn't mess with Fisker. I know you're in there, but you got to make a choice. Another pop, right back down, right? So these are just shorts covering, and then they start leveraging right back in because the business model sucks, apparently. Yeah, you gotta do the research though. That's something you gotta do yourself. I don't know everything. I'm not an oracle of everything. I don't know all this stuff. I mostly do know understand how the macro is running. So like if your company aligns with the macro, sure. But when it comes to electric vehicles, a lot of them are just gonna fail. You gotta be with monopolies. You gotta have monopolies that are not competing with anybody because these other companies, you have to have zero rates for them to go higher. You have to have very low rates. You need the business cycle to be turning up. And right now the business cycle is turning up, but those companies are just terrible. So I don't know. Good luck. It might look something like this for a while. Archimoto. I used to invest in it too. I got in at $1 and it went up tremendously, and then it just kept. I started buying at the lows and it just kept crashing. So this is one of my big losses. I didn't take a lot of risk on it, so it wasn't that big of a loss, but you got to be careful with these. Rivian, will Rivian survive? I think Rivian will survive. Rivian will be okay because they have Amazon backing them. So they'll be okay. Now, is it a great, would I? No, I wouldn't mess with it. I know some people are in it because they want to catch the next Tesla. Here's the thing. A lot of people want to catch the next. There is no next for a lot of these. It's a winner take all category for a lot of these companies. And I would say electric vehicles is pretty much a winner take all. You see, there's not a whole lot of demand. I think Rivian survives. I just don't know if they do very well. They're not making any money. Where's the market at for Rivian? They buy, there's some buying on the trucks, but yeah, that's why I've always told people, hey, be careful with Rivian. I think it's still a trade. And, unless there's some good news on it, but I think it survives. I just don't know if the price goes up. Everybody wants the price to go higher. I don't know if that's going to be the case for Rivian. I studied chips for 3 months and bought NVIDIA at 140. Have to do your homework. There you go, Kiki. Exactly. So with chips, it's like, hey, there's demand coming in from chips because they're going to support the technical cycle of artificial intelligence, and pretty much all technology needs chips, right? China is trying to get chips. So nobody's really trying to get, I mean, that's a different component. Chips are like the base layer component. So if anything, a winner take all would be something that's, what do electric vehicles need? They need batteries. So maybe a battery play would be good. But like MP Materials, something happened to them, but MP Materials, they mine lithium. And I think once rates come back down, they might be a good play. I've been watching it for a while. They mine lithium for electric vehicles, but it's just not time because commodity prices are getting crushed. There's not enough demand yet, right? So you got to understand the macro too. And commodities are a huge component to that versus chips is totally different. What else we got? What do you think about Neo? To be honest, trash. They Neo's losing out of all the EV companies, like the top 10 EV companies, they're losing the most money per car, per vehicle. They're losing the most money. They're spending like 100% more than they're gaining on each vehicle. And so I know everybody thinks this is the next Tesla. And I said, hey, you might get a pop here because technically it's oversold, but it goes even lower. So these companies are probably won't survive. BYD, I think, I don't know if this is even the ticker. I've never looked at it. But BYD, they have multiple streams of income. And I think they're doing electric vehicles too. So they're going to survive. This is the best EV company in China. And they have production, they have supply, they have demand. There's not a whole lot of demand for Neo. It's just really Teslas. And if you're talking pure EV, just Teslas in America. There's not really a demand for EVs other than Teslas. Costco's on fire. Yeah, there's always going to be demand for Costco. Oh man, Costco is on fire. Yep, Costco's on fire. What about Elf? Did Elf ever return? Oh yeah, Elf is one that's been on fire for makeup, beauty products, cosmetics. YINN. What is this? China Bull? Oh man. You got to be careful with the Chinese economy. I think they're going to return at some point, but China's having here's a problem with China. Most of people's wealth, they don't consume anything. They save their money. They're so afraid they save money. They don't really spend. So their GDP is not going higher. They keep printing more money. They keep increasing liquidity, but nobody's really consuming anything. So they're struggling really bad. So China looks really, really bad. Japan looks good. It's at all-time highs. It's at like 30-year highs. But China is stuck. At some point they will pop, but they need to do a deal with the US. Their average consumer, they don't have health care. So what they do is they save their money in case something goes wrong. And until that changes, maybe Baba might do good because it's already huge. I think Baba had a nice pop. But look, we talked about these Chinese companies and we said, hey, look, they're going to struggle for a while. The only thing that probably does good is something that's going to do better with China printing money, which is, crypto. But for the most part, yeah, they're going to sink for a while. There's no consumption. All their money is tied up in real estate. Most Chinese consumers, their money's tied up in real estate, and the real estate market in China is absolutely trash right now. They have literally giant cities that are empty. So China has an issue, but they're going to return at some point. But I wouldn't bet on that when it comes to the Chinese stocks at all. Earnings look bad for ELF for 2020. Okay, that's probably why and I don't really know what earnings look like for ELF, but a lot of markets do change. The relationships change between, consumers. Right now we're in a big innovative stage. And I think the only things that are really promising are going to be big tech, anything with semiconductors, anything with AI, anything with energy storage, electric vehicles, blockchain technology, maybe some genomics like CRISPR. They got an FDA approval, so they had a nice gap or a nice upside move, and you're seeing that support hold in for CRISPR. I think Invitae failed. This is another one. Yeah, this one's still falling. So this is what people do. They buy the dip. This was at $64. Now it's at 42 cents. So people think if I buy the dip, it's going to bounce, but you have to understand the fundamentals. If not, you're going to get crushed. So it's down 99%. Are you kidding me? This is why ARK is getting crushed too. They had a big stake in Invitae, and I'm pretty sure whatever they were trying to do got rejected. I didn't really look into it, but I'm pretty sure something bad happened in the business model. This is why I don't really mess with these, because they can just keep falling, right? You could fall 98% and then fall another 90% from there. So everybody tries to buy these dips. This is not the macro environment to be doing this. We're not the macro environment is set up for The macro environment is set up for crypto and it's set up for big tech. That's pretty much it. Nobody's buying this trash. You got to have a revenue or efficiency, some type of efficiency that's increasing productivity in the economy. Something that increases productivity in the economy is going to go higher. But these are not. These are like big bets on the future. So maybe it does better in 5 or 10 years. But for now, definitely not. Neo, trash. Rivian might be okay, but still trash. Tesla's even getting murked. If Tesla's getting murked, then you know the rest of the electric vehicles are going to get crushed. Tesla is the bellwether for electric vehicles, and if it's doing bad, the rest of them are going to get crushed. PI, would you say Internet of Things? Is that really? I don't know what this is. Huh. Inno data, AI data engineering. I've never even heard of that. Data engineering, yeah. And a lot of these have a name on them too. So you got to, like I said, you got to know the fundamentals. I don't know what the fundamentals are, but obviously the price action tells you something positive is happening here. You got something positive here. I don't know what this is though. So also you have a reverse head and shoulders. There's some buyers stepping in here. Definitely some buyers. There's your shoulder. There's your head. There you go. And then your breakout is somewhere around here. Like $9. $10 is always a huge psychological level. $10. People just love 10. They love whole numbers. What am I looking for? So yeah, that looks good. I don't even know what they do, but I know there's buyers stepping in. Versus those other ones, there's no buyers. There's nobody buying it. There's probably insiders selling it. Who knows? Mini of stock is all-time highs. Mini of stock. Many of stocks are at all-time highs. Yeah, there's a lot of stocks at all-time highs. I would be like, I know people are fishing in the bottoms, but go find something that's at all-time highs. Wait for it to pull back considerably. Right? Let's see. Let's go through some of these. Google is about to be at all-time highs. I mean, it depends if you're investing or trading options, but if you're trading options, your best bet is big tech, mega cap tech, the Magnificent Seven. Meta's headed for all-time highs. It's already almost there, unless it made it today. No, it's almost there. Meta almost at all-time highs, but you don't chase it. You want to wait for that pullback. It's shown some support at this 50-day moving average. Right here, you got 50-day moving average support. It doesn't mean you wait for the 50-day moving average. It just means it's something to look at. It's going to increase your probabilities if it does support. So Meta's moving up. Apple had the biggest rip, I think, in one of the biggest intraday rips it had for a while. So we'll see how Apple earnings turn out. I think that's where the market turns after Apple earnings. I could be wrong. This is honestly probably the hardest market for me to predict or see what's happening. I have no clue. The only market I see going much higher for sure is going to be crypto, because crypto is being driven off of huge inflows from the ETF, the tokenization of all assets. So crypto will do well. But that means it's going to have 20% pullbacks on the way up. As far as equities, it's going to be mega cap tech. If it's not mega cap tech, you better know the fundamentals. You don't really need to know the fundamentals of Netflix or Microsoft. They're not going to gap down 50% or 20% or 10% on you. And if they do, you're going to hear the story on the news. But the rest of them, if you're a beginner, you're going to get smashed. Yeah, Amazon looks good. This is probably one of the catch-up trades that's doing well is Amazon. Amazon looks really good. Did somebody say Amazon, or am I tripping? What do you think about small caps? Yeah, small caps look good. I mean, individual small caps, you got to, again, know the business model, but the Russell looks really good. It's we just went over this earlier. Nice little bull flag. It could break out of this bull flag. Maybe it comes back to retest. I like to see it retest and double bottom here, double bottom at 187-ish. which was that prior support. So I'd like to see IWM come back here if I were interested. I'm not, but or it could be. Who knows? But yeah, small caps. The index looks good. Any individual small caps? I'm not familiar with all the small cap individual stocks. Um, but yeah, small caps look pretty good. I like Teladoc. I think Teladoc has some potential, but again, there's a lot of insider stuff and healthcare that we just don't know about. Amazon has great potential. Yeah, I like Amazon. Amazon's coming out with some crazy AI stuff. Salesforce. This one had a nice consolidation and breakout. Salesforce. Dang, yeah, a lot of these tech companies are starting to move. Shopify. You don't have to worry about Shopify. Like Shopify has a lot of catch-up room here. I don't like the price action on Shopify, but Shopify has a lot of room to catch up, and it will catch up. Look at that vicious sell-off. It'll catch up at some point. What else we got? AI ETFs and look through holdings. There you go. That's a good thing. I take the AI ETFs and look through the holdings, create alerts for technical setups and individual stocks. 100%. Yeah, I would go through IWM. You could do that. You can go through IWM on Robinhood or whatever. Look at the holdings, look at the top holdings, and then go look at the charts on the top holdings. Is that Datadog? DDOG, Datadog? Yeah, I think that's Datadog. Yeah, Datadog catch-up trade. I mean, you can see the huge reverse head and shoulders when it breaks. It looks like it's already breaking above 120. It has momentum. This just tells you it has a lot of momentum. Doesn't mean it goes, higher forever, but it has momentum. And in this environment, it's going to be very volatile because there's a lot of uncertainty when the Fed cuts rates. We're still leaving the bearish macro cycle into the bullish macro cycle. And there's going to be a slowdown in growth in Q1, Q2. We'll start hitting that growth in February. So we might run up until February. But until then, know your catalyst. I don't see any great setups other than, Bitcoin. I wouldn't say all of crypto because there's a lot of trash in there. NASCAR all out. There have been a bunch of sub 10-cent stocks running 250% this week. Every day they pump another one. I believe it. And we haven't even seen real big IPOs yet. Did you know how to check for the small cap index? The small cap index, you can just put in IWM. There's a lot of ways to look at it. Or you could just Google literally IWM holdings, top holdings. Okay. So what else we got? Adobe, SoFi. SoFi is another one. You know which one I do like is Zoom. I still like Zoom. Zoom has more cash. About 50% of their balance sheet is cash. I think Zoom does really well. This is something I do know a little bit about. Zoom has a lot of cash. They're coming out with some AI stuff on communications. This sector is always invested in by the government, which is a communication sector. And as far as I know, businesses are having to shift over to the Zoom infrastructure. And I mean, you can see the reverse head and shoulders starting to form here. It's been in a huge downtrend. And I like Zoom, definitely. There's a lot of support here at 66. And it's not for consumers. It's not, you guys think Zoom, you're thinking like, oh, using Zoom. No, this is for businesses, B2B. Right now we're in a macro environment where B2B is where all the money's at. It's all business to business. It's not necessarily consumer, right? There's not a whole lot of consumer. The same consumer stocks are moving higher. Costco, Amazon, I think Walmart, even though I'd never do that. What's your thoughts on ARM? I don't know too much about ARM, to be honest with you. I know they have some supposedly good products. Obviously, there's demand in it, but I don't know too much about the fundamentals of ARM. I've never really looked into the fundamentals, so I can't tell you too much. It looks like it's going to break out over 78, though. Yeah, I don't know the fundamentals. If I knew all the fundamentals of all these stocks, I'd be a genius. But I don't know. I know there's a short squeeze still here on Carvana. And if they cut rates, Carvana's going much higher because it's an interest rate sensitive stock. I still think the short float's like above 30%. So Carvana can really move. MicroStrategy, another one that pulled back a lot. Really depends on Bitcoin. Also, there's a big short squeeze on MicroStrategy. So technically, Carvana and MicroStrategy have huge short floats, and those can move higher if there's a catalyst. Coin, this is one I do understand. Coin is actually a great setup. This is a huge setup. Right back into the previous resistance. You just need to turn it into support, right? So if altcoins run, coin goes higher. Plus, you're getting BlackRock. They're all buying through Coinbase. Most of them are buying through Coinbase. So Coinbase has a lot of momentum. They have a fundamental case. They have a catalyst. They're going to, they have a catalyst, they have a fundamental case, and it's a solid. It has good technicals too. It's been climbing higher for a while. So I like Coinbase also. Once it gets and holds right back above this level, 135 maybe. TSM has a catalyst. Semiconductors. I think they came out today with some revenue estimate. I don't know who did it. They upgraded them and they just gapped up. So TSM, right? And they're building factories like wild over here in Arizona. I think Phoenix has the most manufacturing facilities for TSM being built right now. So I see this in real time. And the chips revolution is just getting started still. So it's just, price front runs these opportunities. So yeah, TSM looks good. It moved up a lot already. A lot of these already ran up a lot. That's why, I'm looking at Tesla because Tesla hasn't even moved yet, or Zoom hasn't moved yet. Bitcoin's pulling back tremendously. Chainlink is consolidating. One of the only altcoins not getting crushed during this pullback. What else I got up here? Cybersecurity has a huge catalyst. Okta, I don't know how good their business model is, but Okta, you guys see who's the other one that's moving up tremendously? Oh, I can't think of it. It's another cybersecurity name, but cybersecurity has a huge it's a huge catalyst going forward also. You just got to find the right company. You think Rivian can survive? I'm long Rivian, but a super speculative position. I'm seeing a lot of them around where I live. Customers seem very happy. Yeah, I agree. That's fair enough. Speculative. You gotta keep a speculative position for sure. CrowdStrike. There you go. Yeah, CrowdStrike is like they're taking advantage of it. They're destroying it. They're already at all time. I mean, CrowdStrike. If you saw this early in this breakout, right? Cybersecurity is going to be huge because part of the issue right now, there's a lot of demand for defense spending. Where's defense spending going? Well, a lot of it's going into cybersecurity. That's why I like Palantir also. Up 100% from the breakout. So yeah, these things pull back and they move higher. But it all depends what you're trying to do. So yeah, CrowdStrike's a monster. Team. This is like global communications infrastructure. I think this goes higher for sure. And it's starting to form, has momentum, it's starting to form that nice little wedge pattern. So I like that. That's good. Team. And this is all over the globe. Open Door. I don't know about Open Door. Open Door is a little, their businesses, you need lower rates for Open Door. Centennial Loan S. Let me see. What is this? Sentinel One. No clue what this is. There's so many stocks out there. Sentinel One. Looks like there's some demand for it though. Sentinel One. Sounds like a cyber. Oh, that has to be cybersecurity, huh? TSM. Yeah, we went over TSM a little bit, and BA. I wouldn't mess with BA. CrowdStrike's a monster. Some guy was towing a Hummer EV in his Cybertruck, got about 110 miles of range. Wow. NASCAR all out. Okay. Hood. Robinhood is innovating a lot also. When you see these big consolidations, the breakout's going to be tremendous. It's going to be a monster breakout when it does break out. I'm a little more biased because I use Robinhood, so I know how it works, but they are coming out with a lot of features. And when crypto gets going, they're going to start making a lot more revenue. So there's a catalyst behind Robinhood. See, where did the S&P end today? Well, we're at all-time highs now, so I think we're going to get a squeeze here in the market. QCOM. Oh, Qualcomm's a good one too. Qualcomm's a good one. Qualcomm has demand. And Intel. I think somebody mentioned Intel also. So Qualcomm, these are infrastructure plays, right? Building global infrastructure, U.S. infrastructure for communication, semiconductors. A lot of the semiconductor plays are going to be good. You don't go looking for the chart. Look first for, you can look at the chart, but you want to look at the company. Does the company have prospects, right? Growth. What does the revenue look like? Does it have strong prospects going forward? All the software is eating the world 100%. So yeah, Qualcomm is straight. INTC, I think, let's see if Intel ever moved up. I haven't looked at it for a while. Yeah, Intel's looking good. They're building chip manufacturers here in the US. A lot of these chips are doing good. AMD was one of my favorite picks before it broke out. I just missed it, but AMD, I mean, AMD's about to break out of all time. I know it did break out all-time highs. So yeah, but it's overbought. It's extremely overbought. So I would want to see a big, giant sell-off, a nasty 10, 15% sell-off on AMD. I don't know if you get it, right? Right back to this level, like 150. Somewhere around this cup. Solana devs all used to work at Qualcomm. I did not know that. Interesting. Looks like you know your stuff. Yeah, Solana looks like Solana's chart looks, man, that chart looks good. I'm not big on Solana, but the chart is juicy. Look at this. I mean, if you do trade, you know that this is a nice setup right here. Looks like it's trying to bottom here also. It's got to be down at least 20%. What is that, 85? Got down to 85, so it looks like it's holding here. Is it down at least 20%? Let's see. From the highs. Oh, it's down 30%. Yeah, it's down 30% consolidating. So that's probably going to break out nasty. And it's catching up to this moving average. So that's a good setup. And this is, a lot of people love Solana. Believe it's going to, compete with Ethereum. Oh yeah, PayPal. Everybody's watching PayPal. I forgot about that. 110 miles isn't a lot. The thing is, on road trip, towing across the country, you're not charging 100%. Yeah, we'll see how the Cybertruck does. It's a tricky business. A lot of people are disappointed about the Cybertruck. Bullish on PayPal, undervalued, bad sentiment, but I think the CEO is going to, the CEOs can always turn it around. PayPal's one of those that's, I think the setup looks good. I don't think they do well in the long run because there's so much competition, but this thing got crushed. It got crushed, and I think it's very oversold. It got down 83%, and it's about to get out of this reverse head and shoulders. There was that reverse head and shoulders. We drew it last time. Starting to turn up. So what I would want to see is you got to break out of this downtrend, right? You want to see the breakout of the downtrend. A lot of people are going to chase it, but I would want to see the breakout of the downtrend for PayPal because everybody's talking about it on Twitter now. The breakout, the retest, and the hold. Once you break out and you retest and hold, that's the golden pocket. But still understand the fundamentals, what can go wrong. If you know it's undervalued, sentiment is oversold, and yeah, new CEO looks good. Oh, you grabbed a bunch of Solana at 20. Nice. AMD, Nvidia, everything. Okay. Yeah, those are monsters. Take a look at RAD. Oh, those other. I know everybody's looking at RAD. I don't even know what they do. What do they do? A lot of people point out these cryptos and they don't even know what the crypto does. And then they go Google it real quick. What do they do? RAD USDT spot. I don't like this kind of price action. This is crazy. But again, if you're invested in it, you just know what it does. You just want to know, what do they do? Who do they compete with? What is the use case, right? A lot of cryptos have no use case. They're just meme coins. And so if you're doing a meme coin, well, you're gambling, and you better be a good gambler. I'm not saying you should do it, but PDD, these Chinese stocks are dangerous. PDD looks solid though. Dewey. I remember this. I used to trade this back in the day, 2018, 2019, when it first IPO'd. But that's a nice trend. I don't know what they're doing, but this is a nice trend. Nice hold on the 50-day moving average. Of course, it could collapse and fill this gap down here, but you got some room. Dewey. And there's a lot of Chinese stimulus. Maybe a lot of it's coming here. This has to be a software play. PayPal buying back stock at feverish rate. Okay, so there's your catalyst for PayPal. They're buying back stock. They're going to reduce the amount of shares. They're creating scarcity on the stock. That's going to pump their EPS to some degree. A lot of breakout traders are going to come in. So if they're buying back stock, then there's one fundamental catalyst. It's more of a technical fundamental catalyst, because it's technical. They're removing shares. It's not like, oh, PayPal has a new contract with, or they're building a new revenue stream with. Who knows if they're doing they're doing some blockchain stuff, I believe, also. But everybody's just using those buzzwords to get their stock higher. No clue what Dewey is doing. Mara, Riot, PDD owns TikTok. Oh, do they? Dewey owns TikTok. I don't know about that. I'm pretty sure Dewey. I thought TikTok was owned by a private company in China. Mara, Riot. Everybody loves the Mara, Riot. I mean, these are at the beginning of the cycle, so I know everybody's looking at them. Technically, Mara is pulling back. ByteDance. There you go. It's owned by ByteDance. Yeah. TikTok's owned by ByteDance. I don't know the relationship between Dewey and ByteDance, but my assumption is they're not the same entity. So yeah, Mara pulling back into support here. This is all about crypto, right? So your support is 14, 15, maybe 15. $14.70, $14.60. I mean, why not the ETFs? The ETFs are coming out. I think all the liquidity is going to go to these ETFs. Big institutions don't want to mess with this stuff. There's some fund managers messing with it, but big institutions, they're gonna mess with the ETF. Which one looks better, Mara or Riot? Usually people just look at the prices, which has the cheaper options, and then they buy it. I mean, there's a clear support here at 10. This is the easy one. Holds 10, goes higher. Can't hold 10, goes lower. Right? 10. 10, 10, 10. That's your pivot level, 10. Pretty simple for Riot. That's a sell pattern too. Sell. Let's see. It could break out. It's at the bottom of the RSI. But again, you need Bitcoin, right? And then when's the earnings? Oh, you got earnings way ahead. That's not too bad. Also, where's the overall market? What index is it in? They own Temu. No clue what that is. Temu. 3D printing, DM. DM. Well, that sounds like you're invested in this. That's a little different if you know something. Desktop metals, 3D printing. It'll come into play at some point. I know some 3D printers. I don't know about this. It is getting crushed, But I know Triple D, I haven't looked into it. This is another, Triple D is another 3D printing. Looks like it's trying to support that level. And then you also have SSYS Stratasys. These are things I used to trade, invest in back in the day. Stratasys system, another 3D printing, just to throw it on your ticker. Now this one has a crazy history. This one has a lot of history. This is coming from 1994. So yeah, 3D printing. I'd mess with the ETF though, because again, you never know what's actually happening here. 3D printing as a whole will do well over the time. Over time, I mean. Stratasys, 3D Systems. How about Palantir? Palantir is a clear winner in my eyes. Palantir is something you just want to scoop up, in my view, my opinion. No, not financial advice, but Palantir is A plus, A plus. Palantir is A plus, as far as I know. This is the monthly chart. But this is one of the best artificial intelligence plays you can get. Doesn't get a lot of press, very political, but Palantir is going to be a monster eventually. I mean, shoot, if it gets down to 14, that's an automatic scoop right there. I just don't know if it gets our Fed daily. We can start to be more patient and see what the Fed needs to do. Got some Fed speak right now. Yeah, Palantir I like a lot, man. Palantir and Tesla are like the two stocks in the market that I like the most. Over time, though, we're not talking about trading anything that eat the competition. I don't think there's any competition for Palantir or Tesla over time, but you're looking into the future. I'd be surprised if you haven't seen Temu ad. Probably have. They sell cheap garbage shipped from China. Their accounting is sus. They pay a lot for users, but their retention is poor. Temu, okay, cool. Got some smart dudes here. Been looking into buy PDD puts. Okay, let's be leaving. All right, I see you. Dang, we're coming up on 2-hour stream. Don't forget to like the video. I only was going to do like 30 minutes. I was just going to present what the macro looked like, but hey, it is what it is. There's no denying that there's a lot of work still to do. Can't believe what the Fed has to say. We'll see how the market prices it in. What's happening with JP Morgan Chase? What was happening with JP Morgan Chase? JPM? What do you mean what's happening? I mean, they're crushing it because they've been collecting cash from the reverse repo facility and from the T-bills. So little nerdy stuff when it comes to finance or the central banks and the U.S. Treasury. JP Morgan's the biggest bank in the world. They want to tokenize their assets, so they're going to cut a lot of costs. I wouldn't invest in JP Morgan, but there's big buyers in JP Morgan. And basically, they're changing their structure. They're going to start tokenizing and blockchaining their services, meaning they don't need to pay a bunch of middlemen. Financial services has the most middlemen when it comes to asset management, when it comes to trade, settlement, all this stuff. So JP Morgan's innovating. They're using blockchains. They are using blockchain. They even have a coin, JPM coin. So this is why I'm more bullish on crypto. I wouldn't be bullish on JP Morgan, but crypto. That doesn't mean all of crypto. It just means the flood is coming. I think personally the best opportunity in all of markets is in crypto, especially in the next 12 to 18 months. But, you know, it's not financial advice at all. It's time for the crypto cycle. It's a very small market, and it's time to get going. How did we miss SM? Oh, yeah, SMCI. I think that was another semiconductor play. That was, wow, that thing is a monster. Yeah, that's a monster. Super microcomputer. I don't even know who they are, but a lot of these semis are moving. That's a nice consolidation in a rip higher. They don't even have good patterns. They just move. But everybody's going to chase. At this point, risks are more balanced. Okay, good. So you're going to cut. JP Morgan has a private enterprise blockchain called Onyx, but it is not available to buy. And guess what? They're all their Onyx platform is going to use, they're going to have to use CCIP. Screw Jamie Dimon, Chase CEO. He's a yeah, a lot of people don't like him. I can't even say what he said because it's too political, but hey, it's all right. They're going to buy crypto. Yeah, this thing was a monster. 306 to 4. Whoa. This was today? What? No way. Yeah, I missed this. That's a monster move for this big of a stock. Whoever's holding those call options. 25%. Wow. I didn't even hear about this. The semiconductor space is moving. And it's semiconductors for AI, blockchain technology. Here we go. Yeah, that's a big move. Um Hey, we've been on for 2 hours, so I'm pretty much done here. My whole point was just, I'll go over it real quick. If you don't want to hear it, fine. Michigan consumer sentiment up today. Consumers are positive. Inflation expectations are down because gasoline prices are still falling. Well, they're not falling like a rock, but they're still low. Retail sales are growing. Manufacturing industrial production is starting to expand, meaning that the underground economy is picking up. And this is the perfect scenario as growth slows for the consumer for QE or for rate cuts at some point, or for not just rate cuts, but also liquidity, Fed balance sheet, or another program from the Fed. Home builders are starting to build confidence, so they're going to start building. They are building. Building permits are climbing. Housing starts are climbing because everybody's anticipating the rate cuts coming. They're going to cut. They have to. They have no choice. They need to cut rates to pay off so the U.S. Treasury doesn't collapse, because they have to pay all the debt, and the rates do matter. They have too much debt. Fed Beige Book was pretty bearish. The economy is slowing. The market is anticipating not a rate cut anymore in March. They're not even the market is not anticipating, and it's still ripping higher. And then technicals positioning sentiment is still over leveraged. I think we have one more upside move because now markets are at all-time highs, and I think the S&P is going higher. Probably comes back to click support, find some support, and then goes higher. Let me see. Yeah, look at that. Look at that pattern. If it gaps up, it's going to be nasty. There's a lot of people shorting S&P at the highs. It's not going to work. They're going to get squeezed like last time. We have a nice rally probably midway through earnings. We start to correct. It's always around Apple earnings, so watch out for Apple earnings. This is usually where the market starts to reverse, and if it rips up high enough, it would make sense why Apple earning. It would make sense. So we're probably gonna have a pretty nice return here, and then a reverse halfway through. And that's also just because sentiment is gonna be too positive, very greedy, and positioning is gonna be over leveraged. If this plays out the way I think, it'll be over leveraged, and then you have one big risk: the liquidity conditions are gonna run out, meaning we've had support for regional banks from the Bank Term Funding Program, which is a facility created from the Fed. That runs out in March. No more support. Also, the RRP, other liquidity from the Fed, that is going to be running out March, April, May, somewhere around there. It might run out quick. Who knows? If that liquidity runs out, the market's going to say, okay, how are we going to support this slowing growth environment? The Fed's probably going to respond with rate cuts. Until that happens, there's going to be some volatility. Can the chips keep moving? They sure can. But I'd always wait for a nasty pullback on rates. A nasty pullback on the chips. And Celsius looks good. Celsius is cocking back. It looks really good. It is. Did you hear about the government reevaluating gold to a higher rate to cut the deficit? I did not hear about that. Shaft 22.2. Did you hear about the government reevaluating gold to a higher rate to cut the deficit? I don't know if I understand your question 100%, but they need to cut the deficit. They're going to cut rates. The question is how many and when, and that's what the market's trying to figure out. When are you going to cut rates? And they're not going to let the recession happen. Here's the other thing I'll leave you with. At the end of the day, the market's going to rip higher. Check this chart out. This is historical. This is the history of the S&P 500, okay, on a seasonal basis. Q1 is you guys can't see it. Q1 is always... Oh, man, that looks weird. Can I zoom in there? There we go. Q1's always kind of shady, right? It's always kind of shady in Q1. March, which is when they need to figure out, are you cutting rates, right? The market's going to say, we don't know. We're going to freak out. Are you cutting rates? Are you cutting rates? This isn't how it will go. It's just a model. Are you going to cut rates? Are you going to cut rates? Boom. They come in. Janet Yellen says, we're going to create another facility for the banks. They're going to name it something else, but they're still going to support the banks. The Fed's probably going to start shaving off the balance sheet runoff, more liquidity to the market. You're already getting bonds go up, which creates more liquidity because your collateral goes up. They can lend more. Lending's going to pick up because fiscal policy is going to support that lending. And Biden or the White House or the fiscal authorities will keep printing because it's an election cycle. And in election cycles, they're going to buy your vote. Doesn't mean they'll get it, but they're going to try to buy your vote. More liquidity for markets. The only concern here really is, does inflation come back? I don't think so, because productivity is ripping higher. And as productivity goes up, you get more growth with a lower cost. And that's pretty much what I'm seeing here. And we'll see if anything changed. Other than that, I appreciate you guys. Hopefully I gave you a good show, answered your questions. I don't know when I'll be back. I'm working on a course on macro fundamentals and technicals. Other than that, you guys stay blessed, eat healthy, work out, improve every day, learn something new, get better. And you guys stay blessed out there. Appreciate it. You guys have a good weekend.